If you've ever wanted to know how to take a small amount of starting capital and invest it into the market, this video is for you. I'm going to go over all the rules to this for you on the inside once we fire up these charts, but we are going to be working with a $5,000 account. And let's say you have $5,000 that you want to invest into the market, but you don't know where to start, don't know what charts or stocks to buy. I'm going to show you everything inside of this video. My name's Pat Mitchell. I've been a professional day trader for the past 11 years, and I'm here to give you high quality, free education right here on YouTube and on X. So without any further ado, let me explain all the rules of engagement here, and let's rock and roll, folks. I hope you've all had a wonderful day. I'm going to fire up these charts. Okay, so now that we are in the charts, let me explain and give you a little bit of context and tell you what we're dealing with and what we're working with. So I'm going to be producing 3 videos. The first video, which is this video, we're going to work with a very small amount of starting capital. We are going to be choosing 5 stocks and we're going to build out an investment portfolio. So now that we're into the charts, you're obviously going to need some sort of charting software, which isn't expensive. You can pick up TradingView for very inexpensive. Now, you don't need that. You can use basic charts because the way I'm going to show you, you're going to have a very specific look to your chart, and that's the chart we are going to buy, okay? But we are going to do it like this, so then I can show you also how to use a stock scanner or screener. So let's start with screening out, because there's over 2,000 stocks to work with. That's too many. So let's whittle it down. Because we are working with a small amount of starting capital, you're not going to be able to trade the $20, $30, $40, $50, $100, $200, $300 stocks. Obviously, you're going to need to take a little bit more risk and use lower price stocks. So let's go with, we could go with $10 and below or $5 and below. Let's go with $5 and below. Now, we are working with the US stock market, and we're going to want to stick with that. The Canadian stock market is actually really good for swing trading. I am going to be giving a video in time on that. It's less volatility and pure growth. It's actually a little cheat code. And basically, that's about it. Oh, we do need to screen for market cap. So we need 300 million and below because we want something that is going to move for us. We also need to keep in mind the price of the stock is going to be pretty relative to your market cap. And the market cap is essentially your market capitalization is the worth of the company. That's all that means. Don't get tied up too much on these. We're going to keep this really, really simple for you. So now we have a list of stocks. There's a lot of stocks to go through. So I'm going to do this quite fast, and then I'm just going to edit in the ones that pique my attention. Okay, right off the hop, the very first stock I chose here. Now the volume's a little bit low, but for the sizing that we're taking, we'll be all right. The volume that you want to be trading in at an absolute bare minimum is a couple 100,000 shares a day. Now, I know some of you are going to say that's way too low. Remember, this is investment. This is a long-term hold. We're not day trading this. You're buying and holding. So the one thing immediately that I like about this chart, it is sold off and it is starting to hold. Now, once we sell off like this, guys, okay, you want to look at where it was before. So this thing, when it opened, it went ballistic and went all the way up to $21 a share. There's potential for this to come up. Now, I'm not saying it's going to come back up to 20. It can in time. But what I really like about this, so we have support. And what I like about support trades like this, if I were to draw a line straight across like that, where it comes down, sells off, tries to hold, fails, pops back up, reholds that level of support, and it confirms, and it confirms, and there's volume there, okay? So all of that stuff that I just said, all you need to really know is the look of the chart right there. That's great. It's holding, it's basing, it has potential to come up. We don't want to be buying stocks way up at highs. We want to be buying at lows. So that's a perfect stock at $2 per share, $2.09 per share to get us started. So let's mark that one in. So we're going to add that to our watch list. Okay, the next one here is RXT. And again, we want to be buying support. So again, you can see that we are very protected in this trade. So it's come down and it's tested this area right around that $1 mark. That $1 mark is extremely crucial to the life of these stocks and these companies. If it does not hold $1 and it stays below $1 for a certain amount of time, it will get delisted. And that's not a good thing. So they will fight tooth and nail, these companies, to keep it listed, because you don't want to go to the pink sheets. You don't want to go to be some scumbag stock. You want it to be a reputable, legitimate company. Not saying that these are, but in the eyes of investors, that's what you want. It's multi-year support. It's tested that level multiple times. So let's add it to the list, RXT. Okay, now let's continue. Next up on the list is CERS. Exact same setup that we are looking for. So we're looking for multi-year support. A level of support has been tested. It broke through and popped back up. It's tested multiple times. And all it takes to get up there is about a couple of few months maximum. So we're looking for holds of a few months. Now, we can hold longer, but on these types of stocks, you don't want to. You'll have to tune in to the second and third video where we're dealing with more reputable stocks to then hold and invest longer term. Next up is SLRN. And this here has a lot of valid support. It's tested this all the way back from the beginning of the year. We've sold off, we're consolidating, we have more than enough. So on this one here, again, we're working with a very tight stop of only about 20 cents, 30 cents. So on this one here, this is our support zone. We would buy, and I'll show you how to buy these in a minute. Right now, we're just choosing the stocks. So this one is going to get added to the list, SLRN, and let's keep going. Last but certainly not least is SLDB, another one with multi-year support. Very tight risk on this. And we are going to be looking for a couple of support areas here and here at lows. And there we go. So this is going to get added to the list, SLDB. And now that we have our list, we have our 5 stocks, let's talk about how do we buy these. So I'm going to use one of these as an example. Let's use the first one and let's go over how to enter and how to put a stop on these. So one sec, I'm going to zoom in. Okay, so how do we enter? What we want to do, because this is an investment and we're holding long, right? We're not getting in and out of this in a day. We're not looking for that perfect entry. Investing and trading, day trading, are two very different things. For investment, because you're looking to hold much longer, your entry isn't as crucial. It's about getting in. We know what we're risking off of. And then simply, if it does want to come down, we could always add to our positions, which we won't in this situation. That's why we've chosen these with stops that are very tight. So we're looking basically, let's say tomorrow morning, the market opens up. Once some volume comes in, we can simply enter into the position. Now, if it gaps way up, meaning it opens up and it pushes way up or something like that, we wouldn't want to enter. We would need to choose another stock because we still need it in this general area to go long. So basically, once the market opens up and volume comes in, meaning it's not the very first candle of the day, let some volume come in, you're simply going to hit buy. And we'll choose the certain amount of stocks, and we'll go over how to do that in a minute. But that's basically your entry when it comes to investing. Remember, investing and day trading, two very different things. You don't have to be so precise with your entry with investment. Now let's talk about a stop. Where do you stop out if this thing isn't working? Because sometimes that happens and we need to be comfortable with that. And then we would simply close out this position and then enter into another position with similar chart setups that I've shown you. So basically what we have here is a support level. It's already proven that it wants to hold this level here, and it's tested this area. So I would set a stop below 175. So if it got below, okay, if this is our level of our stop and it started coming down and it broke that and it confirmed, meaning the next candle went lower, get out. It's not worth holding because you could always re-enter. Let's say you made a mistake and you stopped out of this position and then it came back up and it wanted to push up. When it confirms that strength again, meaning it dips below, pops back up, pulls back, retests that support level. I know that's a mouthful, guys. I know. You can enter back in to reset on that trade. Don't be afraid of taking losses, guys. We're not using margin. You don't have to worry about losing more than what you've put into the market. Don't do that. Use just cash, the amount of money that you have, and that's it. That's here probably at about 170. Okay, you have to give it that little bit of breathing room because sometimes it likes to. You can see on here, this is a little bit wide, but as it comes down, it breaks and then comes up. So you have to be aware of that. Now that would be a little bit too wide, but you understand the point that I'm making. So we're going to set our stop at 175 and our entry, basically once volume comes in, just hit buy. It's investing. You don't need to be precise. Let's go over one more example of stops, just so then you guys are super, super clear of what to do. We have lows here, so this one's going to be a little bit different. So what we want to be doing, our entry again is going to be here. When the market opens up, you can simply enter because we want to get involved with it. We want to get in this, right? And then if it wants to come down and it breaks this support right here, your last line of defense, that's how you have to look at this. These lows, 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 and lows are defense. Those are physical brick walls in the market. It's very difficult for them to break. There needs to be a catalyst. So you have to trust when it comes down that could be potentially another buying opportunity. Unless it breaks, it gives a very clear definitive break. Then you stop out. So your stop on this one would probably be below that $1 range. Okay, so that $1 range, if it breaks that, so give it to like 98 cents, get out. It ain't worth holding anymore, folks. You can always re-enter if it comes back up and it wants to actually show you that it's strong. So basically what I'm saying is when you're finding support levels to set your stop, look left. Look left on the chart and see what lows, what support. This is support. This is resistance. Technical analysis 101. We want to buy support and sell resistance. So that would be how we would stop out in these positions. So now let's talk about allocation of capital. What type of capital do we want to allocate in these positions? Well, let's take a look at the price, and it's going to be a rough estimation. I'm going to move this chart over a little bit, and we're going to take a look at where we would be entering. So if we are buying this area or this area, that is about $1.25 a share. If we can take 1,000 shares of a $1 stock, that tells me that we could probably take about 800 shares. Let's find out the price of that. So you want to plug in the price of your per share, that's per one share, that's $1.25 times, let's go with 800 and see what that works out to be. So we can take 800 shares of CERS. You take it up to a target, you get out, and then you build that account. And it's really that easy. I'm not saying with 100% certainty that each one of these stocks that I picked is going to go to the moon. It's not what I'm saying. But the charts look good. We are technical traders. That's how you want to look at this. You don't want to be confusing yourself with a bunch of news and catalyst and information. A lot of this is mentality. This is why certain people can do better than others at this, is their mentality and how they're looking at this. We need to be aware that not every single trade you take is going to win. It's not the end of the world, guys. What I tell my clients is there's no difference between a green trade and a red trade if it was a proper trade, not a gamble, not a swinging for the fences bullshit, not entering wherever you wanted to. You're entering into support and you did your job thoroughly and properly. If it doesn't work, it doesn't work. It's okay with that. Sometimes you win, sometimes you lose. These charts that I've given you, these stocks that I've given you are all primed. They're perfect. That's what you want. Now, and as another warning, I'm not saying to buy these stocks. That's not what I'm saying. What I am saying is this is what you want to be looking for your own investment portfolio. Okay. And we want to be trading stocks with volume. When you take a look at the volume on the day, you should be in the 500,000 plus range. You don't want to be going too much lower than that. And I know I said at the beginning, at least 100,000 shares per day. That's very low. It's very low. That chart, the intraday chart, the 1 minute chart, it's going to look like crap. But remember, it's investing. And when it starts coming up, there will be more volume. So you will be able to get out. Don't worry about that. We're also working with very small positions. If you have a 300 share position and it trades 100,000 shares on the day, you'll be able to get out. Don't worry about it. Also, do not use margin. Don't use a margin account. When you're building small accounts, because you're on the hook for that. And when bad things happen, oh, you're on the hook. You will have to pay that. Or they will shut down and close that position for you. Even if it gets a little bit hairy, it hasn't even stopped you out yet. They're going to take out that position. Any excuse for them to reclaim that position, they will take it. So please just use cash. So what I've given you here is the tools. So all I ask out of you is to like this video, subscribe to the channel because there will be more. And if you want to learn how to become a true seasoned professional trader, come to tricktrades.com. If not, please continue to enjoy my free content on YouTube and on X. And I will see you in part 2 and part 3 coming soon. Adios, folks.